What's up, Focus fam? Happy Wednesday. Hope you guys had a Merry Christmas and a happy holidays. We only got a few sessions left to this year, so let's close it out strong and then let's go destroy 2022. But as always, I want to share my thoughts on the overall market, kind of set the pace here for the rest of the week and really just talk about what's possible. And I'm going to share one of my favorite setups that you guys can keep an eye on. But as always, let's dive right in and start with the overall markets, and that is ES. So these past few weeks, guys, we spent a lot of time going up and down, right? Obviously, we spent a lot of time going sideways. We had a nice drop, and then we popped again. And then we spent a lot of time going sideways, we dropped, and now we have a really nice pop forming. So if you guys have been keeping up with our videos here, this was expected. We really needed to kind of chop around because we had to deal with quad witching, we had to deal with OPEX, we had to deal with rebalancing, a lot of market events that just in all reality benefits if the market goes sideways. That's, truly what big money wants to see during those events. And that's exactly what happened. So we got through all that crap. We obviously got through the holidays and Christmas, and now we're just kind of winding into the new year here. However, we are starting to move a little bit more. And while we sat, and chopped around, we started to form a really beautiful 2-day squeeze, which personally is going to continue to be my compass here until the squeeze can really start to fire. If you take a look as we had that consolidation period, just call it heading into, end of November, end of November here, heading into December. We started to really fall nicely inside of this squeeze. The momentum came down, the compression started to build, and now we're working in the other direction. So again, this has taken some time and patience, but if you've been aware of all the things going on in the market, the chop shouldn't have surprised you. And again, the chop sets up a beautiful squeeze, and now it looks like we're starting to move and groove. So this is what I really want to continue to watch. We got a new candle here in the 2-day chart on Wednesday, and that pretty much kept the TTM moving in the right direction. So we are going to get a new candle on Friday. We'll see how that one develops and what it does to the squeeze. But in all reality, guys, this is a beautiful structure. The market's done nothing but go higher this year. So maybe it does continue to push into end of year and, really set the tone for Q1 heading into 2022. But more importantly, guys, let's go talk about a few levels here, because as always, anything can happen. I'm never too biased. I'm just real. I cover up, I cover down, I cover sideways, and I'm prepared for either direction. So the 2-day looks good. That's going to be my main focus. But let's go get a little more technical here on a few things that you can watch. So a few big levels, guys. One is that 47.43.25. That is our prior all-time high that we pretty much, messed around. That was the furthest one that we kissed. We dropped and we ripped right through it. And we have yet to retest that level. So in all reality here, to give yourself some major line in the sand, my opinion is, as long as ES is above that 47.43, it's just screaming bullish, right? Especially with the 2-day structure. Can't ignore these big squeezes, guys. Market's done nothing but go higher this year. At some point that will end, but until then, we want to be ready for more upside here. And again, always a line in the sand. If it does fall below that 47.43, well, then we're going to fall right back inside of that 2-day squeeze. Maybe it takes another week or two. Who knows? Maybe it takes a month. But at some point, it is going to fire up or down in a complete manner. So I'd like to see it, do it now, just because we've already started. So let's just get it out of the way. But again, guys, jokes aside, if we hold 47.43, I'm very, very bullish. But if we dive in here, really want to focus on intraday squeezes. That's what's going to guide us, for a continuation. So if we just take a look at, where is it? Right here. On Monday, when we had ripped through all-time high, we really only took one pullback right, all day. We ripped, pulled back once, and then exploded. So these are two levels that I want to continue to watch. We had that all-time high from Monday, which is this 4784. What is that? 25? Get the Bollinger Band in the way. Yep, 4784.25. And then again, we have this 4766.75. So here's the few scenarios, guys, right? If we continue to hold that 47.66, we're just going to squeeze. And I really recommend that you guys, look in the bio of this video and you can subscribe to the newsletter. But I've kind of been preaching this, since Tuesday, where we tried to come into a 1-hour squeeze. And I've kept saying, if we just hold above this key level here, we're going to continue to squeeze. Well, another day of holding above it, And now we have a beautiful 2-hour squeeze that we didn't have yesterday. So this is why I really love having certain key levels and just watching these squeezes develop. Because again, guys, if it just continues to hold here, you're going to get more and more compression. Where yesterday, you start with an hourly, where you start with one on Monday and you explode. And then you take a day off and you head into an hourly. Well, we just continue to sit here. So that eventually leads to that 2-hour compression, right? And et cetera, et cetera. We could get the 4. I'd like to see if this 2-hour could kind of do its job. So again, guys, heading into end of year here, there could be, a lack of volume, big retail traders, whatever it might be off for the year. And we might just literally continue to chop sideways. However, knowing that, just make sure that you're mindful, manage your risk. I would not get too heavy, but the market is set up really nicely. So in all reality, I would just be patient, watch these squeezes, had a beautiful day on Monday. And these last 2 days have just been kind of the setup day, right? We're either guys going to sit here and continue to consolidate, which again, in that case is if we don't break 47.66 and we don't break 4,800, we're just going to squeeze. Where if we break 47.66, we can get that pullback to that prior all-time high. And then from there, we'll see what happens heading into the new year. Or again, guys, if we do just continue to hold, another level to watch as kind of an accelerator would be if ES can continue to stay above that 47.84. It kind of, dropped underneath it yesterday and then couldn't get back above it. Started the session above it today, fell underneath it, and really couldn't get above it till end of day. But if we just take a look here, we had a really, really nice rally end of day here on Wednesday, and then it got destroyed. Right? Gotta love the market. Rallies, you rally, you wait, you get in, and then they dump it on you. But lines in the sand, guys, candles can look extreme. But again, if you just kind of look at a chart here, we're going sideways. So a little bit more bullish if we're above here. And we got to take out 4,800. Just assuming the market wants to actually move an ATR, we could technically move 66 points. So that, guys, would send us, pretty much towards 48.50, right? We're at psychology. I just personally like to use ATRs, whole numbers. So again, if we break 4,800, we're breaking that all-time high. ATR is about 66 points. Well, that gets us right to the next, big 50 here. So that would be what I'm looking for, guys, on the upside. And again, whether that's tomorrow, Friday, Monday, who knows? But these are the key levels. These are the squeezes, the intraday ones, the 2-day that are going to guide you. This is all you need, in my opinion. And this is personally what I will be relying on. And as of right now, guys, looks really good. But again, we might just kind of drift into the end of the year. We'll see. If you just follow these levels, follow these compasses, you'll know what to do when you see it. Or if we keep holding here and it starts to look good, you should be positioned long. Where if we, slip under there and we keep breaking and we start to break down, you can either, wait to buy the dip or start to position yourself short here, depending your style of trading. But really love, guys, what the market has in store for us. So let's see what this year closes on and let's go kill 2022. I want to share a little bit more here, guys. Let's take a look at NQ. Another good index that we want to keep an eye on. So again, a little bit of a quicker conversation because it is a lot of similar factors where NQ here is also in a 2-day squeeze and, they're trying their best to fire. And again, we got the new candle here today. We did get a little bit of shift in that momentum. If you're familiar with this indicator, whenever we have the red, that's selling, we're starting to work a little bit towards less selling. And now we're starting to see a little bit of buying underneath the surface. Not bad here. So again, want to watch these squeezes, guys, because, whether we pull back, we're going to go back inside of it, or if we hold up here, we could keep moving. So this squeeze, whether we move now or in, a week or two, is going to be the focal point. But if we dive in here again, guys, want to really watch technology because they've been kind of tugging a little bit on the market here the last few days. If you look at today's session, tech technically did close red, and they did the same thing yesterday, I believe. They were at least the weakest one, or YM is trying to keep the market afloat. So ideally, for the market to truly make a nice breakout, we need technology to play along. That's just a really ideal scenario. So to give you guys a few key levels here, really, really want to see NQ stay above this 16,456, which if we just look at a daily chart here and I clean up this chart a bit, that guy's is right here, right? That was kind of, our last little breakout point, right? So we topped out, we eventually bled all the way towards, and then we had a really, really nice break through it. We held it yesterday and we wicked through it today. But very importantly is we got the close above it. And that's what I want to, continue to watch here and emphasize. So switch to my other drawing set. These are a few levels, guys, you can keep an eye on. We did break that that 16,456 today, but we dipped right down to a key level I had here at this 385, right? Just out of $16, these levels. So if we do head back down towards that 385 and break it, at most, guys, at this point, I'm looking for this, 324, which is a point of control level. But again, the fact that it kind of broke it, kissed my next level, and then closed above that 456, that's enough, that's enough love for me. Again, it's been lagging a little bit here, but maybe they rip at end of week. I just want to see it, guys, play along. And again, do its part here, one level at a time. So if we take a look, we are slightly starting to trend down. If we just take the highs from Tuesday, kind of, the wick here, and then naturally these wicks start to align. So again, guys, tech might, pull back here, but if they can get back through and hold 16,456, whether they just flatly go through it or they dip and then break it, they are going to be above this little trend line. Obviously, it's a trend line that just formed, so it's not super, valid. However, it can give you a nice little potential gauge. Or again, if it opens flat, it's above it. Maybe we retest and then bounce. Maybe we open down and then break through it. Maybe the trend line doesn't even matter. But if you watch these levels, guys, we got to get through the pre-market high of today, which was this 564.25. We got pretty dang close to it here at Bell, but then we got crushed. And again, it's starting to form a nice trend line here. We bounced again at close and then kind of got, stuffed, but we did close above this key level. So we'll see what tech can offer, guys. It isn't as clean as ES when it comes to squeezes because it did kind of have a little bit more of a volatile day. But if we take a look here, the 2 hour is technically still intact, just not the best compression. So ideally, not really watching a ton of intraday squeezes on this one, but do want to continue to watch if they start to develop. But again, overall, we have the 2-day, and that's really all that matters to me. And if we look at YM, guys, pretty dang strong here. And I actually just saw this now, made a new all-time high today. Good for them. So again, guys, we're seeing a little bit of rotation. This is something that we can potentially continue to expect heading into the end of year, where, even within technology, they're buying certain things and they're selling certain things, right? Shopify bounces, Google drops. You could see that example today, guys, right? Google popped it open and then Google sold off all day, right? And then like Shopify, dumped it open and then rallied the rest of the day. So we're seeing a lot of, just action here end of year, which makes sense. There's things like tax loss harvesting. There's probably some people rebalancing, whatever it might be. We are, need to pay attention to all these indexes. So as of right now, YM's been the strongest. They've had a really nice rally. And again, they did kind of kiss that all-time high. So pay attention, guys, and just see if, do they sell it back off and does that money rotate back into tech? Or, does YM keep pumping here and do they keep kind of selling tech? Because if that happens, we are just going to kind of chop as a, collective whole. Because you guys are going to understand, when we're rotating, it's going to work like this. We got ES, YM, and NQ. Where if NQ goes lower and YM goes higher, it kind of keeps ES sideways. All right, you can see on the board today, YM up 0.28, NQ down, ES kind of flat. They kind of play tug of war. Where ideally, guys, for the market to go higher, we want to see tech at least pop as well. YM kind of pop as well. And that's going to lead the market higher. So watch rotation, guys. And again, if they do drop YM and they, send that money into tech, oh, where my little bubbles go. Tech, guys, has a better weighting where it can move the market a little bit higher than opposed to if YM is trying to lead the way. I hope that makes some sense here. So that's what I'll be watching as a gauge. Does it continue to rip through highs or do they start to rotate? And again, guys, they're either buying everything, selling everything, or rotating. So, obviously the final scenario would be if YM starts to fail here and they keep selling tech, well, then the market's going to pull back. So watch that rotation, my friends. Let's see. Let's wrap up here, guys. I want to cover VIX and then give you one stock that I really like. But here we go with VIX. So VIX, guys, is super important. Anytime that gets down near 18, kind of a little bit vulnerable for the market, right? And, as the market's kind of squeezed here, so is VIX. And it started to head the other direction here today. So very simply, guys, keep an eye on VIX. Or if it pops back to 18, the market can kind of pull back a bit. Or if it continues to head towards 16, we're going to see that pressure continue to rise in the overall. But I really recommend, guys, being cautious as VIX nears 16 because, historically, anywhere near that 16 to 15, for the last few months here, is where VIX stops. Where VIX stops is where the market tops out. So we still have plenty of leg here, which again could help us fire that 2-day squeeze, kind of get this over with, and then maybe pull back, beginning of Q1 for earnings. We'll see, just kind of theoretically speaking here. Well, that being said, guys, I want to take a look at Google. So Google, always one of my favorite stocks. And, the reason being, guys, on Google right now is it's stacked with squeezes, has a stunning daily squeeze, has a stunning weekly squeeze, and also has a 2-day squeeze, if all of that wasn't enough. We hop in here and look at the daily chart. I really want to put emphasis on this 2904 level. It was a beautiful gap up level, but it's also this daily cloud top. And it's also the daily 50. And it's also the daily 21 exponential. So we have a lot of confluence here on Google. So again, with all the stacked squeezes, guys, little pullback here, my opinion, sets the market up or, sets Google up nicely as long as it's holding. So you guys can see here today, took a pretty nice dip towards it, was strong at open, and then got sold off, and then started to rally back pretty nicely into close. So to cover a few specific levels here, guys, 2950 and these zones above are going to be fairly hard. Google rallied end of week right to that 2965, kind of stopped at it on Monday, opened at it on Tuesday, and, started to drop here. We held 2925, hit 2950. And then we did dip below that 2925 today, but we didn't quite get into that 2904 that I just shared with you guys. I know there's a lot of 29s right now, but stick with me. So for Google, it did dip below here. It didn't quite get to the cloud, but it closed above 2925, which again is constructive. And much like the market, guys, kind of has that, downtrend starting to form, right? Just like, what was it, technology? Yeah, technology. So see if a collective, guys, both of these start to reverse after their dips. Or again, if Google goes below 2925, I'm personally going to wait and see if you can get a dip at 2904, right? You got the 50 daily cloud top, 21 EMA. It's a stunning level. So if we can get it, I'm going to take it. But again, guys, if this naturally, maybe opens low and then explodes, or, if opens sideways and above it, it could start to, reverse its little course of trend here. And that is something that I'm personally, looking to play to the upside this week. So as of right now, guys, again, heading into end of week, you don't want to go too far with any options that you play. But as of right now, I really like the Google 2980 calls. Right, you can look at the top of my list here. 2950s if they get cheaper. 2980s and the 3000s are kind of where I'm sticking at the moment because that's really, the targets here. Where Google, let's see, about a 58, what's called a 60-point ATR. If they can pop off 2925, right, at that 60-point ATR, not saying it has to run an ATR, but I would love to see guys a push back towards that 2950 and then gun to 2982 and then start to take out 3K an all-time high. Whether it's this week or next, if I can get that 2900 dip buy and hold, and the market obviously makes sense to the bullish side, love that dip, guys. Keep a close eye on that one. Look at Google here, also starting a 2-hour squeeze, not anything too tight. They did kind of trickle down today, literally just like technology, slightly in a 2-hour squeeze. Same principles, guys. So pay attention to both of these. And again, heading into end of week, Google options can offer really great risk reward. So that's my thoughts, guys, on Google. Let's see. I'll share one more setup with you. Going to be keeping an eye on Shopify as well, where Shop had a really beautiful bounce last week or two, and they rallied pretty much, guys, back to the daily 21. If I throw on that indicator, you can see the white line right here, and then they pulled all the way back to this blue line and this green line, which the green line is point of control, and the blue line is the 200-day simple. So very nice, pullback for Shopify. So Shop, guys, always a tough one. So I was a little skeptical to share it, but for some reason it can, retest that 1380 or that range tomorrow and start to bounce. Would love to see if, through 1400 can get back towards 1430. Right? Not looking for to do anything crazy, but at least want to look for a little bit of a dip buy here because if you buy low, guys, in Shop, it can make some really good money. right? One of my favorite strikes is the 1450 calls, and those bottom today at $1 and then eventually hit 7, 1 to 7 before they closed. So really, really love the risk reward on shop if you can get a fill. So again, guys, maybe you can pull back, give you a nice bounce up towards that 1430 range here in the next day or two. And if we just look at some strikes, 1450s, guys, is probably where I'll spend most of my time watching. Would not go too far at this point. The 1500s aren't my favorite. Would really narrow in on the 1450s. And yeah, these are a little too expensive. If they get cheaper, that's fine. But really like the 1450s as of now for a main strike. Seeing guys if they can get them around, $1 to $2 on the option. That would be a decent lotto. Again, if the setup makes sense and if it's holding the levels that it needs to hold. But anyways, guys, that is my thoughts here. Really hope you enjoyed this video and found some value. If you did, drop me a comment, a like, a sub, whatever you would like, whatever you feel I deserve. But anyways, guys, finish the year strong. Go crush some Google, crush the market, crush something. But make sure you guys end this year strong, size down, have some fun, right? End it on a good foot. And let's go and crush the new year. Cheers.
Hey, Focus Chan here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.